A good day in the market just got better. Investor Beat starts now. Thanks for watching. I'm Chris Hill, joined in studio by Matt Argersinger. It was a pretty good day in the market. Things were just kind of humming along, and then the Fed minutes get released late in the day from the last Fed meeting, and bottom line, they're really taking an open-ended approach to the rates, even to the point where, short-term rates, they're going to stay low even if we get employment and inflation levels back to where we all want them. It's good news for the market. It's good news for investors.
That's it. That's the news. I mean, it's really, investors got a little worried that, okay, we got this new regime in, the Yellen regime, and how, when are they going to start ratcheting up the rates? There was a few months back, there was that 6.5% unemployment level. We got below that. The idea was we'd start raising rates. Well, now it's like, well, if inflation's under control, if the employment picture gets better, we still might not raise rates because the economy is still weak in certain areas. So it is very accommodative. That's what investors like to see. All
right, let's get to a couple of the movers and shakers in the market today. Intuitive Surgical falling. Company warned first quarter revenue is going to be down about 24%. That seems like a big number. How bad is this?
It's sort of bad in the short term, but really, I mean, if you look at Intuitive Surgical last week, they were up a lot because they came out with their new X1 surgical platform. FDA gave it clearance. So in the meantime, a lot of the older Da Vinci systems are not selling well. Part of it is that hospitals have waited for the new platform, which is going to allow Intuitive Surgical potentially to do more complex surgery. So that's a good thing. At the same time, though, you have to look at hospitals and say, well, there's not a lot of budget out there. So if they own the older Da Vinci systems, are they going to be as excited about buying the new systems? At least in the short term, there's probably going to be a little bit of volatility in Intuitive Surgical's numbers. I think longer term, though, with the new surgical platform, things could look pretty good. So it's more of a, if you're investing in Intuitive Surgical today, 2014 might be rough, 2015 and beyond might be pretty good.
All right, Toyota Motors issuing a recall of 6.4 million vehicles worldwide. Shares down a little bit on the news. Kind of a victim of bad timing here when you consider just last week we were talking about GM being up on Capitol Hill with their recall.
Yeah, right. I kind of feel like Toyota's getting ahead of any potential news here. I mean, it's a huge recall. It affects a lot of vehicles. At the same time, there are no accidents or fatalities that they can link to any of the recalls. So it's just a matter of Toyota saying, hey, we know there's some potential problems out there. We're just getting ahead of it. We're gonna solve them. It is a little bit of Toyota's brand to be about quality and safety. They've taken a few hits themselves in the past. I like the fact that they're being open up front about this, especially in the wake of the GM news. So it's a good move. I understand that the stock's down a little bit today, but over time, I think that this is going to mitigate any destruction of the stock.
All right, that's going to do it for Wednesday's action. Let's look ahead to the rest of the week. Give me a stock I can put on my watch list.
I'm looking at Markel, which is a insurance company. We all love it here at the Fool. I've owned it for a long time. It broke $600 for the first time last week, and it continues to hit new all-time highs. I look at it as, okay, maybe this is the market saying, there's some parts of the market that are undervalued, cheap, unloved. Markel insurance companies have been one of them. There's money rotating to Markel and companies like that right now, away from some of the higher flyers that we've seen do well in the past. So I like it. I think it can continue to go higher. It's still trading for less than 1.3 times book, which is fairly cheap.
All right, for Matt Argersinger, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.